so let's see where we are. So you see now this is the 159, and so if we come and trade above the 159, we should be getting some pretty decent moves. Look at this every time, and this it's been holding. So that 159.96 is going to be a very solid resistance to the upside, and of course if we do break above it, we should get a real explosive move to the upside. So this is the close that we have like this on this day is an excellent close. It is a close that gives us a bias to the upside. It gives us continuation. We should be looking for the pound to continue higher. The only thing that I have for you here, guys, is this. We have closed the week at 159.50. The structure point is 159.96, so it's only 40 points away. And that 40 points is going to be a resistant point, and it is also going to be a magnet. It's going to be a magnet. All the orders that are sitting above the 159.96 is going to be a magnet attracting the prices, the pound, to go up, to test, and to try to go through the 159.96. Having said that, we can now, and you can see this is the 157.80, which we were discussing it yesterday when we were doing the FX trade. That was our buying point right there, and that is the move. And you can see how perfect it is when the 157.80, the structure point, lines up with the high of the range. You can appreciate now the importance of these price points, because when this things happen like this, it is the high of the London session, it is the low of the New York session, it is the high of the previous Tokyo session, and all of this because you have placed a line. Now everything in that market falls into place. You begin to understand and appreciate what this price point means, and therefore you can buy it with confidence when it trades above your structure point. These lining up of price point is not a coincidence. They happen because the markets identify these price points and respect these price points, and if they do, you can see that respect, and if you can see that respect and you can appreciate that respect, you can act upon it, and you can use it gainfully to profit from it. And that's why we trade visually by putting these lines on our charts, because they bring home to us what's happening in the market, and it gives us the ability to make a fast and a quick decision. So having said that, and I have here a structure point right there above 159, about 40 points away, what you can do is my suggestion would be, you guys that, if any of you is going to be trading the Tokyo session and you have the key lines, you can take the buy out of the opening range, because you will be buying it somewhere around 159.60, so you can buy around 159.60, and you're looking for, at least you're guaranteed about 35 pips towards the 159.96, so you would have a profit cushion of that, but you're not going to stay too long. If it doesn't break through the 159.60, then you need to bail out, because this means it's going to be a head fake. So what we are going to do, as you can see, this is here, 159.96 is our structure point from last week. What we're going to do is, this now is going to be our long point. 159.96 is going to be our long point, and therefore, since I told you don't want to overstay your welcome, if it doesn't break and fly, you need to get out. That is your cushion now. So this means we're going to place our stop right below the 159.96. So your long point, your structure long, and your long stop is one and the same. Again, when we say that, use a little bit of common sense. So in this case, your stop is going to be around below the market side of 159.30. On the short side, if you look at this chart over here, there is absolutely no technical reason for us to go short anywhere. Any pullback that's going to happen over here is nothing more than a buying opportunity for you to try to buy it, because again, they will keep on trying to go through the 159.96. So what we're going to do is all these levels here, these are you got 4 levels here, and they will be acting as stops or support for us. So we are going to go short right below, again, the structure point, which is the 157.80. So we're only going to go short below the 157.80, and that is going to be our structural short, and it is going to be our stop. The reason we're doing that is that we are very close to one structure point, which is the 159.96, and therefore, since I have a structure, this is what, as I said, guys, the 159.96 right there is going to be a magnet. This is a magnet. So every push or every move that happens over here, and you get any decline over here, before it goes through that 159.96, is going to be short-lived. They're going to buy it again, because going towards the 159.96 is going to be the path of least resistance, and they have a big juicy target over here with all tons of stops sitting above it. So again, they will be trying to push towards it. So therefore, we're not going any move to the downside here above the 107.82 is not a selling opportunity, rather it is a buying opportunity. You want to buy it until you want to make sure if they are able to break above the 159.96 or not. Okay, so this is the pound. We're going to buy above the 159.96. It is my structure long, and it is my long stop. And on the short side, I'm going to short it below the 157.80, which is my structure short, and it is also my short stop. Okay, that is the pound dollar.